YouTube, what's good? I'm back with another video. This is episode 4 of the 150K account from Apex. And right now we are looking at ES. It's 1158. We're seeing huge run up today, just like yesterday. And I'm thinking the same thing, that overnight gap down back into the fair market value and then a continuation once the market opens. So as you can see, price has gained probably about 100 points just this day. Went from the 41.20s all the way up to 42. And so as you can see, I'm short right there. That's what that little orange arrow is inside that circle. That's about where the high was, about 42.27. So yeah, I got in three contracts to the downside, and we are going to see what that does. Oh, this is also micro ES, not the full size. I like trading with the micros overnight because it's not too much to worry about because it can only go so far, but just a little risk management. You don't want a big trade running while you're asleep. Okay, let's pull the DOM up. Not a crazy imbalance, but there are definitely more buyers. So price is gonna run up, fill those contracts on the sell side. Then it has to fall back down to come back and get those orders under the 16 level. Sitting at 18 flat right now. Look at those. Look at that huge level amount of buyers at 15. 158 more down at 12. So if it doesn't gap down to get these tonight, it's definitely going to gap down to get them tomorrow because those orders have to be filled. And if you look a bit on this volume chart, it's just amazing seeing what's inside the candles. How many people bought at this price, how many people weren't interested at higher prices. It's just a much better perspective. It's 1204. Look at that already creeping down to the downside. And I'm pretty sure tomorrow, uh, Chairman Powell is speaking. So that will be something worth looking at. And we are going to see what this trade does in the morning. About to get a little shutout right now, though. So we will see what this trade is looking like in the AM. So this is in the morning, 8:30 a.m. As you can see at the top of the screen. A little bit of a push up over that 17 area, but nothing too crazy. Don't worry about it. That's only $82 a drawdown. So I'm comfortable with holding that until it makes, either that move to the downside or, pushes up about 5 more points, and I'll probably just get out and take the loss if it does that. So you can see on the DOM, much more orders are starting to fill in. That's the difference between trading at night and trading in the morning. Around 8:30 is when, volume really starts to pick back up, as you can see. I had a little takeoff from that 17 area, but as more buyers and sellers come into the market, it's gonna push back down to that fair value. And again, I just love these volume bars because you can literally see how many people bought and how many people sold. It's just fascinating to watch it, in my opinion. So whenever you see those little levels at the very top or at the very bottom, that's what you would see as a wick on your candlestick charts. And I would much rather see, a wick and overbought and oversold like that instead of just seeing it as a long line on a graph that doesn't really, give you any info. These volume bars show you where a lot of people are getting stuck at in the market. And so yeah, up to 116 and lost right now, but I'm still holding. I get out if I go down 200. But I'm really waiting on on Powell to speak later on, and hopefully that'll get us that move that we're looking to the downside. So we will see about that later. Yeah, and I think the Fed just started speaking because, as you can see, we done pushed down and it got into about $100 of profit. A little bit of money fight going on down here. That 11 level. You can see that blue line is where I got in. So we're below that now. And I can't speak enough about these bars. Because you can literally see all the orders going in right now. Pull up the DOM. Show y'all what's going on in there. Look at this. Look at the sellers. Look at all those buyers. There actually might be more sellers. Let me scroll down and see. Oh, well, it's about even now, actually. It's a few more. It's a few more sellers actually. A couple hundred more sellers. Only 600. Oh, okay. As soon as I start talking about how few sellers there are, they start pouring into the market. All right, then. It's a good sign. Good sign. A lot of volume coming in right now. Lots of back and forth right here in that in that 12, 13 area. No, we don't need the performance in this yet. I haven't closed any trades. So just pulling it up on a regular line chart kind of make it easier to see. But as you can see, that huge red candle started at about 10 o'clock. Let me back up. I go 30 minutes. Yeah, so around 9:30, 10 o'clock, that's when that big red candle first formed. Now we're in the money. Trying to get a move down to the 70s, maybe once Powell starts speaking. Take us off, a big chunk of that red candle. Yep, we are getting there. Also, while I got a chance, bro, thank y'all on all the subscribes. We're almost at 400, man. I really appreciate it. Shit fucking warms my heart to see, people are getting value from what I'm putting out. And it just motivates me to keep going harder, you feel me? So, much love to y'all, bro. I'm actually about to, might as well put on the Fed, huh? Since we're just watching the chart, we might as well watch what the motherfucker who dictates this shit gotta say. Not to say, the Fed dictates the market, but the things that they say affect it. Yeah, so let's get a little bit of Jerome in here, man. We're gonna put that Jerome on, see what he gotta say.
It's certainly true that we had both before and after the pandemic, unemployment very low, close to 3.5%, but that we only had high inflation after the pandemic. Does that mean that our understanding of the relationship between slack and inflation is badly wrong, or that it has changed fundamentally after the pandemic? And my answer would be tentatively no to both of those questions. I think what really is different this time was the series of unexpected and persistent supply shocks that featured in the inflation process. I don't think labor market slack was a particularly important feature of inflation when it first spiked in spring of 2021. By contrast, I do think that labor market slack is likely to be an increasingly important factor in inflation going forward. In particular, inflation in non-housing services is showing signs of real persistence. In this highly diverse sector, labor costs are a high proportion of total costs, and that sector happens to account for more than half of the core PCE index. But all of this, the point is, all of this can be explained, I think, using our standard framework for understanding labor market slack. You could say it this way, that the natural rate of employment probably rose sharply as the pandemic severely disrupted the labor market. And the implication of that would be that an unemployment rate of, say, 4% indicated a much tighter labor market in 2021 than it did in 2018. And as Ben mentioned, of course, after the pandemic, we began looking at much more closely at alternative measures, particularly vacancies, but also quits, which have been signaling even greater tightness than the unemployment rate alone might have thought to have been to signal. I mean, to put some numbers on it, we at the end of 2018 and the end of 2021, we had 4% roughly unemployment in both cases. In 2018, the vacancies to unemployment ratio was 1-to-1 essentially. In 2021, it was 2-to-1. And that was a much better indicator, obviously, at that time of the simple standalone unemployment rate. Although, as I mentioned, you could also think of it as the natural rate being highly elevated. The other thing is, it may also be the case that the Phillips curve has steepened, meaning that inflation has returned, at least for now, to being more responsive to changes in the labor market slack. But the Phillips curve was once thought to be fairly steep after flattening. Relationships in the economy, like the Phillips curve, evolve over time. So I would not characterize that as a problem for our understanding of inflation.
Very good, thank you. Maybe we can pivot here to the topic of central bank communications. It's widely understood now that the better the public understands the conduct of monetary policy, the more effective it will be. But fostering that type of understanding really requires a lot of communications, and of course, that can be hard. Both of you have been powerful advocates for advancing monetary policy communications, both with an eye toward making policy more effective, but also for the purposes of promoting transparency and accountability. Ben, you've obviously played a critical role here, advancing the FOMC's communications, including the introduction of press conferences after FOMC meetings, the introduction of the summary of economic projections. So what changes over this period since the communication, say, revolution began, would you highlight as being some of the most effective, most important, and where do some remaining challenges exist?
Well, let me talk about communication, because I think you need to understand that it serves multiple purposes. I mean, one of its purposes, the narrow purpose, is to try to align market expectations with the Fed's own thinking. I think that goes back to Alan Greenspan. We go back to 1994, the first FOMC statement. I mean, since then, the Fed has tried at least to give some indication of what it's thinking and what it sees as the risks to the economy. But beyond that, you mentioned transparency and accountability. This is a powerful institution. It's very important that it be accountable to the Congress and to the public. And the best way to do that is explain what we think, what we're doing, and how we're going to go about that. There's other reasons for communication. One I would talk about is feedback. We're having a conference here. If the Fed puts out the issues that it's concerned about, economists will write articles or tweet and respond to that. Or in the case of the Fed Listens program, maybe it would be more ordinary people who are explaining, how monetary policy affects them. One final thing I would mention is diversity of views. Because the Fed has a consensus culture, and there are very few dissents normally, the outside perception is the Fed is subject to groupthink, which of course is possible, but with people talking about, their own views and explaining why they see the economy as they do, it does, I think, at least to some extent, show that there is a range of opinion on the committee. In terms of tools, I guess I do feel proud about the press conferences, which I introduced 4 times a year after the Summary of Economic Projections, in which Chair Powell has taken to an art form. I think also, just the inflation target, the forecasts that we release, and there's a cultural change, which some people don't like, but I think on net is good, which is, it used to be, if you look back at speeches in the Greenspan era, the president of the Federal Reserve Bank of Minneapolis, would talk about, harvests or something, wouldn't talk very much about the global or national economy. Now you have a lot of people talking about, the different aspects of the Federal Reserve's views. And again, that contributes to both market transparency and also to accountability to the local constituency and to the national constituency.
Jay, you of course have continued to push forward on the communications and transparency fronts. Welcome your thoughts.
I think the broader setting is that transparency is especially important today. Polling data show that many important public and private institutions globally have struggled to retain the public's trust and support in recent years. Now, we're an institution that serves a critical public mission, but to be here and work here is to know that the particulars of what we do and how we do it are not generally top of mind for most people. And on top of that, we have a critical and a rare grant of independence. And all of that, to me, means that we have a special obligation to explain ourselves clearly, what we do, why we do it, to provide transparency to the public and their elected representatives in Congress, so that we can earn and deserve their trust and support. And that's a critical task if we are going to sustain our democratic legitimacy through this interesting.
And as you can see, my dog Jerome just got through speaking, and price is down to that 4201 level. It's crazy. I'm pretty sure that's the only white dude named Jerome that I've ever heard of. Jerome Powell. That's crazy. So good old Jerome got us turned up. Look at that fat red candle all the way down. I told y'all last night, big gap down, and we are trying to see how far this will go. The only thing you should be upset about in trading is not taking a bigger position, because had I taken, full size contracts, I'd be up about 2,000 right now. But slow and steady wins the race. Nice movement here. Very nice, very nice. I'm sitting at that 255 profit. Gonna see how far down it can run. I'm really looking to get out around somewhere in here, 80s, the 80, 82, something like that. I'm not gonna hold on this all day because I do have other things to do and can't be here to monitor it. So yeah, that's how today is going. Trying to break that 300. And there she goes, kidding. It's falling, it's falling, it's falling. Look at that. That's perfect. I love watching Powell talk. Usually good things happen after. So yeah, man, that's gonna do it for this episode. Episode 5, actually. I'm not even gonna play with it. You know, I could let this ride longer, get more profits, but I am not greedy. $330 from last night. Look at this huge move.
Order filled.
Order filled. That's what we love to hear. And just look at this, bro. This is perfect. This is a perfect trade. Well, I wouldn't say perfect. I could have caught up here had I stayed up a little longer, but I'm 100% fine with that, and it's only going lower, so I don't care. You know, I got my $300 profit. That's really what I was looking for. I'm sure it's gonna go all the way down, but it's Friday, so I'm not gonna spend all day looking at this computer. Happy Friday! Shout out to Jerome Powell, my boy. I'm out. Appreciate all the love that y'all been showing to my channel, man. Keep commenting, subscribing. We going up. It's our year this year. Peace.